What do you think's going on in Bitcoin?
I think if you're talking Bitcoin programmability and Bitcoin DeFi, what's happening is we have more builders than users right now. That's what I'm seeing, and there's a lot of interest in making Bitcoin useful, but there hasn't been a product that gets people to use their Bitcoin on it sufficiently, right? To spill over to the rest of crypto and to bring people from all over. Babylon has done a good job. You know, some of these layer twos have on the surface great TVL, but it seems that not enough to really take over like we've seen from actual, layers and dApps outside of Bitcoin Fi that have gotten TVL, sticky TVL, and grown with it, right? And built these DeFi primitives that have gotten users onboarded to crypto, right? And you've got Ethereum with DeFi, you've got Solana with Launchpad and RWA. We spoke about Hyperliquid and perp dexes, but Bitcoin Fi hasn't had this specific vertical that it's dominated in and had a very clear product market fit where users and even users outside of crypto can actually be onboarded because of the specific app or product. Obviously, I mentioned Babylon has done really good, and liquid restaking tokens have as well, but not to a sufficient level yet. And if you're talking about lending or, just Bitcoin token standards like Runes, BRC20s, Alkanes, they haven't gotten to that level yet where you can say with confidence that this is a sector that is going to endure and is investable and is going to onboard a sufficient amount of people to just keep these projects going and have a flywheel that keeps itself organically.
Yeah, I feel like that's a huge problem, right? Like if there's more builders and no one's actually using the stuff, then what's the point? You're like building, and this I've heard as a problem with crypto in general. Like Josh Kushner from Tribe Capital has said this. He's like, there's a lot of problems looking for, or solutions looking for problems, and I feel like we do run into that. But at the same time, this is Bitcoin. This is the biggest asset of our generation that came, and a lot of people are holding it. So they do want to. I think there is a desire to do something with it, but we haven't necessarily seen it. And we see it on the Ethereum side with Aave and some of these protocols, and there I would say there is a bit of product market fit with like Wrap BTC, but we're not seeing it necessarily yet on Bitcoin. So why do you think that is?
I think first of all, the infrastructure is not where it needs to be yet, and Maestro is significantly helping that. Shout out Maestro, but the infrastructure is not there. And in terms of the builders, a lot of them are just forking or borrowing the playbooks of other chains and just slapping, oh, it's on Bitcoin, and kind of taking a break. We haven't seen new apps or anything that's exciting and new, like a new Ponzi or something like Pump Fund, right? Like where you can have a token that you know is not a rug, like there's no specific innovation that could capture or create a new category of applications, right? You think about Olympus DAO. When that happened, right, you had a brand new kind of Ponzi, and that kind of rallies everybody to it. You have Pump Fund, obviously. You have Time.Fund, which was recent and pretty interesting. Even what's it called, Zora on Base. You have all of these apps which are innovating on existing DeFi primitives and kind of creating new things that people can interact with and try out. On the Bitcoin side, there's been some of them, none of them have really moved up market and caught retail as much, right? There is a strong community in Runes. There is a strong community in BRC20s, notably with Ordi, and Ordi's done really, really well. But the world is your oyster. You can really build what you want, right? Like, yes, it's harder to build on Bitcoin, but it's going to endure. Bitcoin's going to be here in 5 years. Bitcoin's going to be here in 10 years. There's the Lindy effect, right? You can't say that about the other chains. You can't say that about, a lot of these stable coins that are coming out. Some of them are going with their own layer, right? You have Plasma, you have Stable, who just raised a massive round from Bitfinex. So we don't know if Ethereum is going to stay the stablecoin play, right? The one thing is that Bitcoin's going to be here in 5 years. All of these, high performance layers that have been all the rage this cycle, Solana, Sui, Sei, we don't know if they're going to be the flavor of the month next cycle, right? So that thing that it's anchored and you can trust it, right? Bitcoin, you can trust it. It's going to stay. Building on it is a privilege. Building on it is a massive advantage. And so that's why it should be that you can build apps with a long-term horizon. You can build apps that kind of lean into that ethos. The infrastructure is getting there. I think what's going to break it open, kind of like the iPhone moment, is going to be that product that's going to make it seamless, that's going to make it, you can't even feel that it's built on Bitcoin. But it is, and that's going to change everything for Bitcoin Fi, I think.
What do you think that product is? Like, what are customers or Bitcoin holders really looking for? And also, from my perspective, I feel like a lot of people, like, Bitcoin has just been the best performing asset and investment of the last decade. So people are just like, why would I risk my Bitcoin, especially with Mt. Gox, Celsius, and like all these various hacks and collapses? Why would I risk my Bitcoin when I could just hold it and I know that this is going to 10x in value, right? So I feel like that's also part of the issue with Bitcoin Fi, is that the incentives to earn 4 or 5, 10% yield, for example, on your Bitcoin aren't really there if there's a risk of losing it.
Yeah, definitely. I agree. I think, so right off the bat, the things that are closest to product market fit, I think are there's staking, there's lending. With lending and borrowing, you get to borrow off of it, and it kind of becomes a live off of your Bitcoin strategy. And if it's on Bitcoin too, then you don't have to trust the counterparty. I think that's extremely interesting. With staking, getting a little bit of yield, but it does feel that with these two categories, there is a sort of mirage on how much demand there is. And that comes back to your point where, the compounded annual growth rate of Bitcoin is so high that why would I risk it to stake for a couple of percentage, even if it is Bitcoin native? Or why would I borrow against it, right? Which borrow will always be a product market fit, but why not, through one of these centralized players like 2Prime, right? Or all of these banks that are coming into the space with JP Morgan notably. I think in terms of a product that would have a chance to make that wave is Bitcoin denominated, marketplaces, for example. So trading, one of the big use cases in crypto is perpetual decentralized exchanges. Being able to trade with Bitcoin as margin or with Bitcoin as collateral, and that is, you're always trading against Bitcoin, right? It's not denominated in fiat. That could be very interesting, and Ruxum is doing that. Kind of product where Bitcoin is the central benchmark. You're trying to outperform, or you're trading off of it as collateral. I think those are the interesting ones. If they can do it on Bitcoin as well, then you're kind of checking off everything. You can trust it, you can try to outperform, you can try to trade, and you're doing it all on the blockchain everybody can trust, and we'll be here forever, right, basically. So, and that comes back to the point about one of the clear needs for Bitcoin Fi is that miner rewards will go down, right, with blocks going down with time, and we need fees to go up for them to still be incentivized, right? And something like a perp dex or any sort of marketplace that is denominated in BTC and not in some sort of USDC or USDT, that could be extremely interesting, right? We'll see how it goes. Stable coins on BTC have not had as much growth as you'd like. It's a good narrative, but is it enough of a pain point for users to actually use these on Bitcoin? The ones that have done the best are the ones that are Bitcoin backed, but you can use outside of Bitcoin, which is kind of a bummer, right? Those are the ones that did the best, notably USDA from Avalon. But I mean, still great, better than the centralized ones, but we haven't seen it yet.
So yeah, you're saying there might not be a big enough of a pain point for stable coins to be on Bitcoin. I think we do see product market fit with stable coins, but unlike the Lightning thesis, it doesn't necessarily have to be Bitcoin denominated. It looks like obviously Tron has a lot of stablecoin volume. Solana has a ton of stablecoin volume, and Base now I think has the world's most stablecoin volume, and they're doing trillions every month, which is crazy. But maybe could you talk to me about what you see with Avalon and stablecoins on Bitcoin? What are people trying to do here with the stablecoins, and how are they addressing something that isn't a pressing need in the market, or addressing something slightly different with the Bitcoin thesis?
Yeah, I think the base of trading and the DeFi ecosystem is an AMM, a lending protocol, and a stablecoin, right? And with Bitcoin Fi up until now, we haven't had USDT or USDC come in and be able to be used at scale, right? There's been conversations with Lightning Network, there's been conversations here and there, but nothing real yet. And these stablecoins, let's talk about algorithmic ones to start off. They haven't done that well, and their TVL is pretty low, and I don't feel like there is really demand for that, right? Oh, you stick a Bitcoin, and they're usually on layer twos, and you get some sort of yield through arbitrage or delta neutral strategies, and they haven't scaled, and we don't know if that yield is going to stay. And most of them, honestly, from the small sample that I've seen, are not going to be sustainable. It's not quality yield. For the CDP ones, collateralized debt positions, I think those have a great market. In a way, you're supplying your BTC. You can use that stable outside in the ecosystem at wide, and they're the ones that have had the most interest from TVL, from a TVL perspective. The ones that I'm the most interested in, though, are the ones like Starknet's USDC runes, right? Asset runes. And what those allow is to vitalize the Bitcoin tokens side of things, right? Where instead of trading runes with Bitcoin as a pair, you have USDC, and that kind of changes the whole game, because through the cycles, people want to take profit when they're more bearish into stables, and then maybe wait it out and try to time the market and try to buy dog again when it's lower. And when you're taking profit in BTC, it's not as smooth. It's not and we've seen that in centralized exchanges. We've seen that on perp dexes on chain. People just prefer stables when they want to be delta negative to the market, right? So I think that will help a lot for all these tokens, Alkanes, Runes, BRC20s on chain, to really find a lot more trading volume and just more people minting them, more people trading them, more people transferring them. For example, Ordi on BRC20s, most of its $130 million of daily trading volume is through perpetual centralized exchanges and perpetual perps on centralized exchanges like Binance, for example, and those are denominated in USDT. So most of the trading people want to do is with stable pairs, and it's clear that those stables coming to Bitcoin is going to help those meta protocols and those Bitcoin token standards. But beyond that, being able to have your Bitcoin on Bitcoin, right? Just native BTC, and being able to take profit into a stable on Bitcoin, and then try to buy Bitcoin again when it dips, which is what every person in crypto tries to do, right? Time the market, whether it's with regard to Bitcoin, whether it's with regard to the rest of your portfolio. You're always looking for that time when there's too much euphoria and you wanna take some chips off the table and then come back. And obviously, nobody really times the market well, but it's what we all fantasize about, right? But being able to do that on BTC and taking profit into a stable, but while staying on Bitcoin, and then going back into native Bitcoin when Bitcoin crashes enough that you feel like you're Warren Buffett, I think that's an extremely great ideal to have one day, right? I don't need to just sell off to Coinbase and then wire it. I don't need to go to a centralized exchange and sell my BTC and then go back and buy native Bitcoin and have it on my hardware wallet. I can just stay on chain on Bitcoin, and that's going to create more fees. That's going to make the whole network more sustainable long term.
So what I'm hearing from you is that Bitcoin's missing the get rich quick and trading community to a degree. Like it needs the killer application that enables people to feel like, hey, I'm an expert trader. You know, look at this token absolutely pump. I can get stables versus my Bitcoin. You think that's the killer app that retail is missing for us to see like a lot more people in Bitcoin?
I just think people are already like this. Everybody in crypto is already like this, even the builders. And so having it be on Bitcoin instead of elsewhere is the closest path to, because that's already something that they're doing, right? So you're really appealing to existing behavior. Other than that, what I mentioned previously is more, DeFi innovations that appeal to that get rich quick. Yes, like Olympus DAO or Pump Fund, getting that 100x, that 1000x. Those are interesting. And then you got more of the, more brick and mortar, like straight use cases like staking and lending, and those have done good. But capturing the market share that DeFi at wide has in lending and staking, or even the just corporate providers, right? Like the custodians, like P2P for staking, which is the biggest provider of staking, like the institutional like lenders. That's going to be very, very hard, and it's going to take some time before people are okay. Because you, for example, Davis, you hold Bitcoin, right? If I tell you want to you want to take a loan right now, okay, and buy a house or something, are you more comfortable going on chain and getting a loan, or going to JP Morgan next year and transferring your Bitcoin and getting fiat direct in your bank account? Most people would go for the latter.
For sure. I'm using Coinbase or JP Morgan, and I'm a DeFi guy. I'm a Bitcoin DeFi guy, but yeah, I would be like, whoa, I'm buying a house here.
Definitely, yeah. If we can get to a point where there is enough trust in these protocols and they run enough and there is the liquidity, then why not just stay on Bitcoin, right? You don't get to provide your data, and if potentially there's leaks, and there's always leaks, right? Coinbase had a massive leak recently. You don't have to trust JP Morgan. You don't have to trust the government if they want to freeze your stuff if you say the wrong thing, or you're against the current meta of politics or whatever. You're the only one that decides. Code is law, and that's all you have to trust. I think that's interesting at one point. And I believe it's coming, and when that comes, people will want to not have to trust the government or trust big banks, right? Big banks led us to 2008, and 2008 led us to Bitcoin. So in a way, it's going to happen again. We know that. Are you going to be ready?
Yeah, it's super interesting. I feel like it's interesting or weird for our generation, because we haven't had. Like we had 2008, but we were really kids during that financial crisis. I think I was like 13 years old or something. So it was like, oh, what's this thing that's happening? I didn't understand what the Federal Reserve was or money printing. But that was our first bout of quantitative easing, and we got out of it, and it was like, okay, this is fine. And then in subsequent during COVID, uh, and even after COVID, whenever there's like even a hint of a big recession or a big market collapse, where we are hitting the QE button like crazy. So for us now, it's been, almost what, we're approaching 20 years without like a heavy recession, but we have a shit ton of federal debt. It'll be interesting what happens like when there is a recession, which inevitably there will be. There's no this time is different. Are people going to go to Bitcoin, right? Are people going to denominate things in Bitcoin? Are you going to start buying like Bitcoin for Bitcoin? Like, oh, I'll give you Bitcoin for this car, but it never actually settles in a dollar price. That's where I find it interesting. Do you think we'll ever get there?
I believe so. I believe that hyper Bitcoinization is coming. And another factor to this, relating to our generation, it is. Another factor that's related to our generation is that we are in a generation where the purchasing power is so low, right? Nobody can own a home almost, right? And it gets you into that state where instead of having the specific career and stay here and make more money, and by the time I'm 35, 40, whatever, I get a house. It's a lot more all or nothing, right? People try to make it and go off grid. People try to get that 100x and just cash out. That's the zeitgeist right now, especially in our generation, right? And the fact that we have been kind of hit over and over again by fiat depreciating, by home prices going up a lot more than salaries. You get to a point where it is justified. And on the other, there's a lot of anxiety in our generation in terms of money, and the other one is in terms of AI is coming, right? So a lot of you see that over and over again where people are saying you gotta get rich now before AI takes over, and then nobody's gonna make money anymore. So make your money now, right? So eventually, people are gonna realize that anxiety is unfounded, and Bitcoin is the way that you can get back that belief in a steady climb towards wealth, right? Because that's what we had before, and you had people with one salary at a just average job, having a family and a home and a car and a boat potentially, but now that's impossible. Right, you really need to be in the top 10%, top 5% to have a normal life that we would have had 70 years ago. Denominating in BTC and saving in BTC gives you that life back, right? And as BTC, right, the best convincer for Bitcoin is its price action, and as it keeps going up, as it keeps outperforming fiat, what you get is that it's going to convince more and more people that that's what you should be holding. That's what you should be believing in if you want to have that life that you should have had if it wasn't for, going off the gold standard and banks ripping you off and the Federal Reserve printing all the time based on nothing. And obviously the federal debt as well, which is at 33 trillion and only going to go up. Bitcoin is the hedge.
Mm-hmm. Well, awesome. I love it. I think we covered some good ground here. I always have fun talking with you, Mick. Any final parting words for our audience here?
I think buy Bitcoin, get involved in Bitcoin, see what's getting built on Bitcoin. It's only gonna get better if you're on this side. I feel like you have the digital asset treasuries, you have the regulation getting more clear day by day, you have countries adopting it, companies putting it on their balance sheet. We're in a different paradigm, right? And the risk reward is a lot lower to believe, and so I just feel like getting on Bitcoin, seeing what's getting built is the best way to hedge yourself against this, not just the current situation we're in just staying the same, because we're heading towards monetary disaster. So hedge it, buy Bitcoin, believe in Bitcoin, and you'll be okay. Kind of a cultish
right.
line.
I love it.
Yes, sir.
Hey, we'll take it. We'll take it. So until next time, hedge the risk, buy Bitcoin, and avoid monetary disaster. Just to end on a bright note.
Yeah, life is short. Go long.
Stuff coming.
Yes, sir.
Life is short. Go long. All right. We'll see you guys.
See ya.